Investment Officer of Prodigy Investments. Ravi, morning. Thank you for thank you for joining us. Ravi, globally, yes, indeed, liquidity is driving global markets and Indian markets, and central bankers are injecting more liquidity. But ultimately, it's commodities which decide and determine growth. Can markets afford to ignore high commodity prices?
Yes, I think that's definitely the bugbear in this whole thing, that excessive liquidity, while it will continue to drive up markets, it's also going to have an impact on commodity prices. So that at some point is going to be inflationary all over again. And it's only when we see growth with controlled inflation do you really have a secular bull market. So yes, I agree with you, Nikunj. It's definitely something we can't ignore.
Ravi, strength and liquidity has dominated the month of Jan and the month of Feb. But in the month of March, we are pitted against some key events. Outcome of UP elections, budget, credit policy. So how do you see Indian markets will move in the month of March?
Absolutely. I think the election results, UP, Punjab, both are very important. You have the budget ahead of you, and as well as the fact that, the RBI is going to be looking at the budget, and this part of this rally is about interest rates coming off. So we really got to see what kind of fiscal consolidation happens, government borrowing numbers which are put out in the budget, and then we can hope that there will be some interest rate cuts sooner rather than later. So yes, I think that we've had a very smooth run in January and February, the last few days notwithstanding. I think March is going to be far more complicated. We're going to have volatility, the kind of which we saw a taste of it. Markets are going to consolidate, and I think it actually may not be a bad thing for markets to consolidate, because you had a 1,000-point run from 4,600 to 5,600. It was practically non-stop. So markets were highly overbought. They were looking for a reason to correct. They got the reason with oil prices spiking. I think March is going to be far more, it's going to be a consolidation month, and I think from April onwards we'll possibly see positive direction again.
Ravi, hi, morning. When we started the year 2012, the best estimates were about a gain of 15 to 20%. We're recently, or rather already up 20% this year. Do you think we will remain range bound for the rest of the year? And this is a cap of 20% that the market is sitting on?
Yeah, that's a good question, and it's a moot point. When the year started, expectations were really low. Participation levels were really low. People were expecting that corporate numbers will remain really weak. But I think the big change has come in with FI money, and FI money has really turned a negative spiral that we were in into a positive spiral. And we've seen that when you are in a positive spiral, many things get glossed over. Corporate numbers, people are seeing bad news, the market is glossing over it. So I think many of the negatives that we have seen, the market is simply taking it in its stride and moving forward. And that's what makes me think that even though we've had 15 to 18% gains in the first 2 months, the nature of this rally, the strength of the rally, the kind of pullback we've had on Tuesday, it makes me think that it's likely that there's more ahead, simply because the liquidity is going to continue.
Ravi, just about everybody is betting on rate sensitives with the assumption that RBI will start cutting rates next quarter. Do you think the rate sensitive trade for Indian markets is now getting crowded?
Again, a very good point. Definitely, I think in the short run they got crowded, and you saw that correction happen in the last couple of days, trading days, where rate sensitives corrected the most. But I still think that and I think we are all fairly of the view that interest rates are going to come off. We've seen the worst of them. It's a question of when is it going to happen? Is it going to happen sooner rather than later? So in the short run, rate sensitives will correct, but at the same time, given that they were the biggest underperformers last year, I still think that that is the strategy for this year, to be in rate sensitives.
Ravi, how exactly are you planning to approach companies which have a stretched balance sheet, names like GMR, GVK, Lanco, Suzlon, Unitech?
Look, even in the rate sensitive space, you have companies with good balance sheets and poor balance sheets. And I would feel that at least experience in the market has taught me that whatever it is, even if I get lower returns, stay with quality, stay with balance sheets which can be mended, those which are not really over leveraged to the extent that it's difficult. So pick the rate sensitives that are high up on the qualify as quality investment.
So, Ravi, at these levels, is one better off investing in something like an HDFC Bank, which is expensive but safe, or is State Bank of India a better bet at current levels, which is cheap but volatile?
Yeah, again, Nikunj, I see what you're trying to say. I would say take the mid path. I would definitely keep something in an HDFC Bank simply because it's pristine quality, and in spite of its high valuation, I feel fairly comfortable about the visibility for the next 2 to 3 years in terms of, earnings growth of 25%. But rather than go for a state bank, I would suggest something like an ICICI Bank or an Axis Bank, where you don't have issues like how are they going to raise capital going forward the next few years, NPA issues, even though they have been on the investment side and that has been stressed. But once the economy turns, I would imagine that would actually be a positive for them because the delta coming out of that side would be very high. So rather than a state bank, maybe you should go for the other private sector banks like ICICI Bank, Axis Bank.
Ravi, are you surprised with the price action in Tata Motors? The stock is now at an all-time high.
Yes and no, because I think even the September numbers were really good. And I think December numbers continue to be good. And I think if I look at what the market is expecting in FY13, the earnings growth is quite strong. It's a single-digit multiple. Jaguar is expected to, the Evoque model is expected to do quite well in some of the launches in the emerging markets. So I would say that one of the market leaders in the rally this time is going to be Tata Motors. And we've seen that, leaders can go to multiples which people don't expect them to go to. So I would definitely feel that Tata Motors should be in portfolios.
What about Reliance, Ravi? Because that has cut its ENP estimates. Do you think the stock will continue to underperform in an otherwise rising market?
Yes, I would feel that Reliance is not going to be a leader in this rally. I feel that they have issues which are holding them back. And in spite of, the buyback, etc., which will provide a floor to the stock, nevertheless, earnings are not going to support a re-rating or a great up move. So it is going to be a market performer in my view.